Hello and welcome to Moneycontrol. You've tuned into IPO Watch and I'm your host Nickey Mirchandani. We're here to talk about Jana Small Finance Bank, which opens for bidding. The initial public offering opens for bidding today, Feb 7th, and goes on till Feb 9th. The IPO price band is in the range of around 393 to 414 per equity share. The company overall plans to raise, is looking rather to raise 570 crore from this initial public offering. Will be split in two bits where you're going to be raising in another good 462 odd crore from the fresh issue and another 108 crore coming in from the OFS. But to know more about the company's financials, the strategy and the outlook going forward, we're being joined by Mr. Ajay Kanwal, who's the Managing Director and CEO. Good morning there. Let's start off with the basics and let's get that out of the way. What is your unique selling point? I'm going to get to the point first. What's your unique selling point amidst the already listed small finance banks that we have, number of names out there, right? So what's your cutting edge? How do you differentiate yourself against your peers? Talk more about your product offering and also your clients for that matter.
Okay. So, Nickey, a very good morning to you and to all the viewers too. So, when you look at Jana, what should you see? I think first you should see a bank with a professional management team who's turned around the bank.
Right.
And we have turned around in two parts. One is financials. So, very profitable. If you look at our September numbers, the return on equity is 19%, ROA is 1.6, and very importantly, net NP at 0.9. So, good financial answers, which should matter to investors.
Okay.
Second, very important thing is, when we began a bank, our history was microfinance.
Okay.
And we said, listen, let's be customer-led and let's shift towards secured products like mortgages, loans against property, two-wheelers, etc.
Right.
Today, as I speak to you, we are at roughly 58% is secured assets.
Get on to that in just a bit. I'm sure you're...
So I was saying, listen, you should invest in a bank which is giving you good financials,
right,
has a good quality of book, and has transformed the bank towards secured. The journey is not yet over. We are there. We're getting there. The second piece I would say is, digitization.
Okay.
We are absolutely digitized to the core.
Okay.
And never say never, so we keep at it. So I think it's a very digital organization.
Okay.
And which we'll see more and more operating leverage come in as time passes.
Okay.
Final one, Nickey, I would say we are a national franchise. So we are in 24 states, 771 branches, 49 lakh customers. So we don't have geographic concentration.
Right.
So very easy for us to grow.
Okay.
I'll stop here because I know you have more deeper questions.
No, I'm sure you've pretty much touched base on most of the core issues that you've preempted that we're going to pick up as a part of the questions. I'm already assuming that. But let's get on to your profitability part bit before we start off with the concerns list that we have. Explain us about your higher NIMs, because they seem to be on the higher side as compared to some like peers like Ujjivan, Equitas, Surya Bank for that matter, a couple of other names. What kind of direction going ahead for your NIM profile? What are the drivers and how sustainable is this growth that we're looking at?
Right. So, Nickey, our NIM actual number is 7.8%.
Right.
As of September. It was 7.7% as of March. See, we operate in a very competitive environment, right? So, I can't charge more to customers because obviously they won't bank with me. Similarly, if I undercharge too much, then, we will be picked up.
Not made profits,
right?
Yeah.
And obviously be visible. So I do think that our NIMs are pretty much in line with the competition offers.
It's a little on the higher side, I must say, that, as compared to the industry standards, it seemed to be higher. How sustainable is this growth and how yielding are the loans that have been given in the past?
Yeah. So to my mind, it's sustainable.
Right.
And yields will shift based on how much are you secured versus unsecured.
Right.
Right. So as you turn more and more secured, your NIMs will go slightly lower. Your cost income will be better, and obviously your NPS will be lower. If you're more unsecured, then the reverse could happen, which is your NIMs will be higher. Your cost income will be slightly more higher because obviously a lot of collections cost, and your NPS could be higher.
That's exactly why I'm asking you the question that I'm asking you, right? From unsecured, you're slightly transitioning more towards the secured.
Correct.
By virtue of that, do you think there will be some normalization of NIMs that will come through?
Correct. So, starting from 0% secured, we are at 58.
Right.
So, that NIM absorption we already done.
Right.
Right. Now, we have to do the next batch. But that's not the majority of the batch. So, yes, as we turn secured, there could be NIM compression. I don't think so it will be significant in nature. because the bulk of it is already absorbed.
Right.
We are already at 58%, right? So
Okay.
let's say whatever we get to, the bulk is already in the play. So won't really go down too much from here.
So what's the range one can look at from 3 to 5 year perspective? I'm not just asking you the near-term targets per se, but a range ballpark that we can work with.
So, Nickey, we've received advice, and as you would know, pre-IPO, any forward-looking statement could get me in trouble. So please excuse me for this.
Okay, so I'm just going to ask you another question in that case. Talk about your NPA. You have spoken enough and more about your net NPA now being at that certain level, but gross NPA has been the worst amidst the industry, if I may just put it that way. Despite the improvement that you've seen from FY21 to 23, 7% was the number, which came down to 3.5% gross NPA. Correct me here. For the first half, tell us what's the number looking like, and why is the bank typically looking at such high NPA?
So our current number is 2.4% gross.
As of 6 months.
As of September.
Okay.
Our net NPA is 0.9%.
Okay.
And our provision coverage ratio is 65%.
Right.
So all parameters should say, listen, we went through, if you take March 20 numbers, and they are also in the public domain, our net NPA was 0.5, gross was around 1.5%, 2%. COVID happened.
Right.
Right. And you obviously are serving the underserved. You are in the middle and to bottom end of India. People did lose livelihoods. Things were more strained. So natural for gross NPA to go up. Only thing I can say is, in the every year of COVID, we made all the provisions that we needed to make, and yet we were profitable. So we didn't dip into capital for a single year. I think COVID is, in my mind, a 1 in 25-year event. It's unexpected, unplanned. NPA should have gone up. It did go up. We are fully
But it's
provisioned.
way higher than the industry standards. That's because of your lending part also to the weaker segment of the economy, which has led to the amount of NPA that has come through. And you have changed the strategy now. Have I got that right?
So, Nickey, we changed strategy from 2018.
Okay.
But yes, you're right. When we entered COVID, we were 43% secured. Now we are 58% secured. See, NPA, we were pretty much in line with industry, because if you take the microfinance book versus microfinance players, secured versus secured, we did see the same answers. But all I'm saying is, yes, 7% gross NPA in COVID was normal to expect, because obviously things were not so great from many customers' perspective.
I mean, that's the only bank that I could pick up with that kind of gross NPA at that time. Of course, we are going to further get on to the company now, the bank being the fourth largest in terms of AUM. What's your strategy to grow forward? Which is the section that you would be typically targeting? Where would you get that incremental amount of growth, if I may put it as?
So, couple of very important things. Number one is large national franchise. We have enough and more customers who have banked with us. So our total customer base, which we have served, is about 1.2 crores.
Right.
Live is 49 lakhs. Just first half, between March to September, we have grown 3 lakh customers.
Okay.
So one thing is pretty obvious, that customer reception of the bank's turnaround times, product, pricing, geographical reach is very well accepted. So growth is not the issue. For us, primary has been good growth, which is why I said gross NPA at 2.4, net NPA at 0.9, PCR 65. That's very important to us. And to us, that is the most important piece. We are going towards a journey of becoming more and more a secured bank with products like mortgages, loans against property, two-wheeler loans, etc. That journey won't stop. So yeah, to answer your question, we have the right bouquet of products. We are working in an underserved segment. To my mind, growth is less of an issue. To my mind, working on good growth is a more important one.
Okay. Any specific range that you would like to provide us in terms of your guidance, comfort level with the asset quality, that now that you've improved significantly, of course, also in the last couple of years, and the great deal has been done in the first 6 months. Now, what kind of range are you comfortable with?
So, Nickey, my answer would be, if you look at the bank pre-COVID, it was the 1.5 to 2% gross NPA.
Right.
And if you look at post-COVID, it is the 2% gross NPA range, right? With net NPA both times being less than 1%.
Okay.
So I think pre-COVID, we were in the natural range.
Okay.
Today, we are in the natural range. COVID was an aberration which we lived through.
Okay, so okay, all right. That point is well taken, and the range is well understood there. But let's talk about the weak financial profile of Jana Holdings and Jana Capital Limited, the promoter entities of the bank. The rating agency notes especially say that these entities remain in breach of the regulatory capital and leverage requirements. What explains that? What were the concerns in the first place? Have you resolved that?
Correct. So I think that's a good point. All the concerns were related to debt in the holding company.
Right.
Those have been resolved.
Right.
And things are absolutely fine. The next maturity of debt is way out in, I think, May 2026, and that's a publicly available and disclosed document. So there is nothing as a concern on the top
Okay.
at the holding company.
At the holding company. And how about Jana Capital Limited?
So it's a three-level structure, Nickey, which is Jana Capital.
Okay.
It holds 100% of Jana Holding,
Okay.
and Jana Holding is a promoter of the bank.
Okay.
So when I say I am talking on a combined basis, there is nothing there which is of any concern because all the debt has been repaid and rolled over.
Okay, so debt was the only pressure point, no
Correct.
other concerns
Correct.
that were flagged off?
See, the holding company does no business.
Okay.
It just holds shares of the bank.
Okay.
It has got no operational business.
Okay.
Right? So there is no reason for it to be challenged.
Okay.
The only reason it raised debt or capital was to fund the bank.
Right.
That's about it. So once the ratios got a bit vary, they were fixed and they are all back to normal. The holding company does no other business, so nothing to worry about. It just holds shares of the bank.
Okay, the last point that I'd want to touch base, of course, you've spoken about it right at the opening remarks where you spoke about the transitioning happening to your secured book. Unsecured book is one of the highest amongst the small finance bank at 42%, which I'm sure the ratio is changing right now. What are your steps in reducing it? What can one expect the number to look like by the end of the financial year, or for that matter by FY25?
Yeah. So Nickey, just I want to do a small data point here. We are among the less unsecured small finance banks because we've transitioned from nearly 100% unsecured to 42%. This has been an organic transition over the last 5.5 years.
Okay.
So if you ask me, yes, we are moving towards more and more secured loans, and that has been literally a secular path. So that won't change. Having said unsecured, listen, a large part of our unsecured business, because we are in business for the last 16 years, are existing customers coming for the next loan. What that means is we have seen their past performance, we've seen them pay us back, we have checked their bureau, and we're comfortable with them. So while I know that secured, we've spoken a lot, I really also want to tell the viewers that, listen, unsecured is not something we should worry about. The only time unsecured is really challenged, both Jana and the industry, has been 2 times of severe difficulty.
Okay.
And it's been COVID. So, you look at all the numbers of any microfinance company, including Jana, we are all reporting 99% collections. Right. So, and we are reporting 99% because economy is doing fine. I'm sure there are some customers who will have medical issues, or they lose their job, or they've got some business challenge. I mean, those are very minor percentages.
That's the beauty of an event like COVID, right? It just teaches you that you're not supposed to belong in certain risky assets which are high yielding. So in virtue of that, have you changed the plan? How is now the number looking like?
Sorry to be repetitive, Nickey, but the plan always has been to turn secured since March 18, when COVID was not even thought of.
Okay.
So we were at 43% secured, like I mentioned, already in 18 to 20 when COVID happened. That journey continues. I mean, we were not, to us, COVID was very important. It just reaffirmed what we were doing.
Okay.
And we obviously continue on the same track.
So how does the strategy evolve now? I mean, now post-COVID, what's the strategy? How are you looking at, perhaps facing that intense competition pressure that one is looking at? What's your strategy here?
So listen, there has always been intense competition pressure, but if you take September, our growth rate of asset business has been about 40-odd%. Our liability growth is at 37.7%. And yes, see, first, large market, underserved market, and we have a national presence. We are digitized, product is accepted, and we are in an execution mode.
Okay.
So in my mind, yes, strategy-wise, no change. We're going to remain very steady. Our profit models are working. Our expectation of risk is being answered. The teams are fine. So really, if you ask me, are we going to make any significant change? No. But to us, it's just head down and execute. And make it better. So service will get better, digitization will get better, but no surprises, just focus on the current strategy.
Okay. All right. A bit of NIM compression, asset quality remains improved there. The strategy towards secure lending, long and short of what the company is trying, or the small finance bank is trying to do. But let's also, since we are looking at RBI monetary policy also, which is going to be coming through, and there have been varied number of expectations. Of course, rate cuts is not one of them. But how are you looking at the event? How are you looking at the industry cycle and the rate cuts? How will that influence your financials in the first place?
So, number wise, March our cost of deposit was 7.2. September it is 7.6. So we've seen a 40 bip jump in our cost of deposits. I did mention that NIM is 7.7 at 7.8. So mix of products will make sure NIM remains the same.
Right.
I think what has been announced in the budget saw a bit of softening on the bond yields.
Yes.
So at least in my head, you've kind of plateaued out on where interest rates should be.
Okay.
You're right, may not get a soft or any softening in a hurry, but I don't think so hardening beyond this point.
Sure. All right, sir, we'll just leave it at that. Thank you so much for taking out the time and having this conversation with us. With this, it's a wrap. Thank you so much for tuning in.